The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time on Thursday morning. We got about 24 minutes to go until an all-important jobs number tomorrow. We got Bank of England raising rates by 50 basis points, the most since 1995. We'll get some action in Forex. We get some action in the markets. And as I talk to you, things rolling over a bit. Right now, we're at 41.57. We were as low as about 41.55 just at 8 a.m. Eastern Time. You see S&Ps hanging on to gains by 1 point right now. You were as high as about 41.73. So giving up about 15 or 16 points from the upside this morning. NASDAQ 100, you're up by 14 points this morning, but giving back as well. You're talking about 75 points off the highs. We had all those highs taking place about 6:30 in the morning on the NASDAQ 100 and about 6:30 as well on the S&Ps. Dow just turns negative, 32,760. The Russell positive by 1. All the indices basically flat right now. Definitely considering the context of the run that we've had. I think I saw it's either the NASDAQ or the NASDAQ 100 up 19% from the lows. S&P up about 13% from those lows. You're only talking about 6 weeks ago. Huge moves across the board. Excuse me, Bitcoin down about $600 this morning, 22,885. How about crude? We almost got an 89 handle last night. Make it down to 90.15. We're sitting at 90.52 right now. That's a 1-minute chart just to see some volatility. Back to a 15-minute chart, basically right down at the lows. You talk about some volatility, man. And crude, context is important. Man, you're well below, not well below, well back to basically where that area exploded higher when the war broke out, sitting at about $90. You see the slow climb we had in December. Slow climb, pretty fast climb actually, from $70 to $90 before that acceleration to 130. We're back to levels that you're talking about February 3rd, prices on crude. Now, you're talking about a higher area there, about $85, but pretty remarkable. You're talking about last year, October. We were up at about $85. We're sitting at about 90. Think how the world has changed since even last October. Obviously, the market not pricing in enough risk in terms of war breaking out, Putin really going into Ukraine for an extended war with horrible, horrible human tolls as well as economic tolls across Europe and the whole globe as crude spikes. That's what happens, but we were sitting at $85 last October. Are we really going to break below $85 right now in terms of what we're dealing with right now versus what we were dealing with back in October? We're going to find out. We're sitting at about 90 today. S&P's up by 1. You jump back to the gold contract, catching a little bit of a bid. We were just at 1,800 this morning. There's your 5-minute chart, up to 1,805, right at the highs we had on Tuesday. You've backed off a bit, but putting gold on that longer-term time frame, right? Quite a consolidation area. Gold is in 1,700, the lower part, 2,000, the higher part. We're sitting at about 1,800 in gold. And you see on a couple occasions, whether it's March of last year, came down to this area and bounced. You also got a very quick acceleration in August of last year down to this area. You could have made the case there that maybe 1,750 was the area that you had supporting gold. You hit the 1,700 mark. We're up to about 1,800 in gold. And then you jump to notes and bonds. A little bit of a reprieve in terms of higher price and lower yield after Tuesday and Wednesday's give up. Man, you talk about a give up from 122.02 down almost 3 full points in just more than 24 hours, folks. Staggering levels. You have the 10-year rising above 2.8%, I think, 2.88 maybe. Maybe it had 2.9. And just like that, we've backed off a bit. The 10-year positive by 16 ticks. But you take a look at this thing, and even if you put it on a weekly, right? Yeah, we have a little bit of a bounce, but look at this move we've had. I mean, you're talking about a straight line move from basically the middle of 2020 at 140 down to 114. We have a bit of a bounce back to a daily on the 10 years right now. And yeah, rising a bit. We'll see as we deal with lower interest rates. Remarkable, you had 3.5% at 114.07 just about 6 weeks ago. And we get the jobs number tomorrow. We get jobs number tomorrow. We get CPI next week. And let's jump into Bank of England. They raised rates by the most since 1995. The interesting thing here is they have a very gloomy outlook for their GDP, for their economy, and for the inflation that they are going to be faced with. How about inflation possibly peaking later in the year for England at 13.3%? The bummer of it, folks, is inflation gets so political here in the U.S., and I'm sure everywhere, but it is bananas inflation everywhere across the globe, which is why the Fed has taken a little bit of a heat saying, yeah, you inflated this economy, you inflated the numbers at a time when we had supply chain woes, but you can't just punish the economy because there are other factors at work here. And maybe that's what the Fed opened their eyes and ears to the possibility of last meeting, which is why we've had such a move. England, 13.3% inflation. I think they're looking for 6 consecutive quarters of declining GDP. The biggest interest rate hike in 27 years, as it warned the UK is heading for more than a year of recession under the weight of soaring inflation. Half-point increase to 1.75%. When they get into the numbers, 13.3% in October amid a surge in gas prices. One of the price gains will remain elevated throughout 2023. Quite a number when you look at that. And then they had a decrease in terms of, I was trying to get to the numbers they had for this year and next. There you go. The economy contracting about 1.25% this year for England and a further 0.25% for the following year. Unemployment climbing to 6.3%. So pretty gloomy action on the pound, U.S. dollar, because yes, you get a 50 basis point hike, the biggest one since 1995, but what does it come with? It comes with the notion that they are in big trouble, and that comes with the notion that there's no way they're going to be able to proceed at a fast interest rate hiking cycle if they have such recessionary tendencies coming at them for 6 consecutive quarters of declining GDP. When you look at that type of a number, and then you look at they're going to be facing 13.3% inflation, you're not usually facing 13.3% inflation as you're staring down the line at a year and a half of declining economic numbers. Quite a headache for England. And you have the pound pulling back on that from about 122 to 121. We're sitting right now 121.05 on that pound. All right, jumping back to our markets, S&P at 41.59. Let's jump around to some of the FANG stocks as we get ready for the open. We got Amazon trading up this morning by almost another $1. You see huge moves yesterday. What was the NASDAQ up? 2.5% yesterday. Some of the FANG stocks in particular, huge accelerations. Amazon, Apple, a notable one. I put it into the den yesterday. Apple, yesterday, adding, I'm not sure if it did it by the close, okay, but at one point, Apple had added itself $100 billion in market cap. Okay, and Apple's move, just doing these calculations that it had since the middle of June, that's when interest rates were at 3.5%. You want to think interest rates matter, folks? They matter. That's right. Okay, Apple has gained $37.09 to be exact. Okay, and they have 16 billion shares outstanding. I believe around the numbers, it's about $590 billion in market cap that they've added in 6 weeks. Almost $600 billion in market cap. Folks, we didn't have trillion-dollar companies for the longest time until 2019 or 2018 or something like that. In the last 6 weeks alone, Apple, the size of that company, has added $600 billion to the market cap. You talk about a run, man. NASDAQ? Yeah, NASDAQ's on fire, folks. Apple on fire as well. Stay tuned. We'll be back with our man, Kevin Hincks.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P sneaking into negative territory right now. Futures negative by 2. You got the Dow negative by 58, NASDAQ 100 positive by 5, and the Russell flat. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV. Fast Market on the TD Ameritrade Network with your host, Kevin Hincks, Tom White, the team at TD Ameritrade Network. They do an outstanding job, folks, of breaking down the day's market action, and they walk you through hypothetical trade setups, all right? They get multiple takes on the same trade, maybe multiple trades on the same equity, all of them using options, talking about defined risk. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, this is kind of the quiet before tomorrow's big economic data. Markets are a little hesitant to start the day. Here's something we haven't been able to say lately, Tommy. Some of the indices are actually getting close to overbought territory. We haven't been able to pull that term out in quite a while. Tommy, looking to tomorrow's non-farm payroll data, unemployment data, the question really is, when will this jobless claims data, the elevated jobless claims data, the lower JOLTS number, when is this going to start showing up in some of the data? Right now, the expectations are 250,000 jobs, still a good solid number, lower than a month ago, but a solid number. 3.6 unemployment, same as last month. I mean, a historically low level of unemployment. So when do these numbers start to show up in the data? And you can say the same thing, frankly, about inflation or CPI. When does that start to show up? So we're waiting. We're waiting for these big turns in the economy, Tommy. And so far, we keep waiting.
Yeah, I would say they have to come eventually if the market optimism is going to play out with the Fed not having to hike as fast. It's always interesting. We're in this phase right now where we're going to get the jobs numbers tomorrow, and if things are running too hot, the market might not like that, right? And good news, bad news, good news, quite a dichotomy in the market that we face. But, man, the Fed just leaves it all hanging out, Kevin. We get some pretty important numbers tomorrow, and then we get CPI next week. And the last CPI number was 9.1%, and the Fed said they're going off the data. So we better see some action, man. With that in mind, we're still coming into earnings. The S&P's holding up pretty well this week. Earnings season going pretty well overall. What are you guys talking about at 12 today coming up on Fast Market, Kevin?
So 4 names say that we're looking at. We're going to look at DoorDash and Expedia in the first block. Just Tom White and I on the show today. Like Folio will do their presentation on Block, the old Square. Jack Dorsey's other company that's not in a takeover discussion right now. And then Western Digital in the final segment of the show. So a bunch of good names today to look at.
Yeah, interesting. DoorDash, I was a big fan. I am a big fan. Uber Eats we get in the house. I was using Instacart so often during the pandemic and just with the family. It was very advantageous in the beginning. You didn't have to go out, and then it just became a time factor. But I tell you, my personal take, man, those fees, you pay them long enough, they add up, and finally you say, man, this is just too much on some of those fees. Instacart was one of them. I've really calmed down. It's just too expensive, and probably with prices rising, man, quite a battle. Uber Eats, similar deal. When you see some of those fees, they're battling out there. I was listening to your conversation yesterday, Kevin, on Penn. They got their numbers pretty tame action right now. But for those that didn't check out the program yesterday, and shame on them, check it out today, folks. Give them a little take of what you were talking about yesterday, because I love the take of, a different generation. And, of course, you had some disagreements on the program. But this is what some of those gaming companies are dealing with, like Penn.
Yeah, my take and the discussion that I had with Landon Swan was about the younger generation of bettors and how I think the future of betting is on your phone and easier, and versus going into a casino, the brick and mortar casino as a place to gamble. We had a great. Landon still thinks that casinos have their role. I do too. I think the casinos have a role in terms of destination and travel and vacations. But I think the majority with the younger audience, the majority of gambling is going to shift to your phone. You can do it more of an impulse. You can do it more quickly right there on your phone, using your phone without any need to travel, and you can bet really quickly. So I think just like so many things in our economy, the world is moving towards more online betting and using your phone to gamble, things like that. So, yeah, it was a great discussion that we had. And these stocks, Penn National, DraftKings, they're going to be involved in that eventually, right?
Yes,
and so
definitely.
Competition's going to be rough for them, but still, it's a pretty exciting industry.
I thought it was a great conversation, man, and both making great points. And where the industry ends up, there's going to be a presence of both of them for sure. It's especially interesting. We have a Hard Rock in Tampa, Kevin. It is like slot central, folks, and it is an older generation, and it's very difficult to imagine myself, even my generation, ending up at the slots smoking cigarettes, which is what so much of that casino is, and. That casino, man, the Seminoles own the Hard Rock, man, they just make so much money across the state of Florida, let alone in Vegas as well. And coming from an online gambling, online poker background, sports gambling from your couch, folks, that's quite a deal compared to Vegas
and
itself.
Fantasy football leads you more to your phone and less. Believe me, I understand. And remember, I'm the older of the two. Landon is younger than me. He's the one promoting the casinos, and I'm the one promoting more online gambling on your phone as the trend. I just see that's where the advancement of this is going to take us. But obviously, it doesn't always go as quickly or as prompt as we want. But the trends certainly seem to be that way, and a younger generation is much more interested in fantasy football than, say, blackjack.
A million folds. And I think, just better able to analyze that. And even Landon said, you put down $100, man, you're getting back $98.50 or whatever it is per hand. For some reason, that seems tougher to stomach. Maybe because there's better ways to get action, like betting on football on your phone. And like the days of Vegas, man, I still like going to the Hard Rock, Kevin. I'll take $100 maybe for some fun on a Saturday night as an experience, right? And you see Vegas going to that as well. You know, maybe I'll take the family out there because I'm talking to, the family saying, listen, we don't have to gamble. I'm not going to gamble if I take the family out. We're going to go eat at some of the best restaurants. We're going to go play in these pools that are made of Olympic-sized stadiums and all that good stuff that goes with it.
And you're talking about things that you could, but it's still good to be out. The question is, where are the trends going, and are the numbers moving up or moving down? And I think that was the gist of the conversation. Where are the trends? And I think the trends are going towards on the phone. Doesn't mean it's going to be 100% because people eat at home and they also eat out. It's different. But we had a great discussion on where I think the trends are going.
And what is so cool, folks, is that when they get in-game betting, which is not a big part of really our industry because we're not aware of it, but over in England and so forth, being traders out there, you understand that the line is always moving throughout a game. And that's where the whole game is going to change, man. And I can't wait to see how, whether it's ESPN, football, NFL, as those types of displays, augmented reality type things become part of those performances and then the broadcasts. Well, Kevin, we appreciate the time as always, man. We look forward to the program at 12 o'clock today, and we will talk to you next Tuesday, man. You have a great day, great weekend.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in today. You heard it. They're talking about 4 big names. They'll be talking about, of course, the market action and jobs number coming up tomorrow. We'll be right back for the open, folks.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you open basically flat territory. S&P's right now flat to the tick at 41.55. NASDAQ flat to the tick as well, 13,276. We have the Dow barely in the red right now at 32,718. We jump to commodities. Crude, $89 and 48 cents. The low, folks. We have an 89 handle on the price of crude. Gold contract, $17.93. And you jump to notes and bonds right now. The 10-year gives back some of the gains. I mean, these are huge moves in any other world. 8:30 in the morning, we're at 120.26. We just gave up 13 ticks, man, just like that. To pull this over, just seeing where we are in terms of the yield on the 10-year before we jump into the news of the day, you're talking about a yield of 2.7%. Let me jump back to that chart. Yield of 2.7%. Yeah, as we were even yesterday when you were down here at a low of about 119.10. We're more than a point up there. You put this thing on a 15-minute. The moves in the notes and bonds, just staggering, man. Down 3 points, up 1.5 points. We're now about a full point off of the lows of yesterday still. Okay, jumping around to some of the news I have pulled up here. Obviously, strategists just disagreeing right now, giving all viewpoints. Goldman and Bernstein say stocks rally set to fade. One thing I wanted to pull up here in particular, the PE ratio, long-term. MSCI World Index's long-term PE ratio doesn't look attractive yet. I mean, you look at that pullback, man, the 20-year average, it didn't even make it to the pullback, to the average, right? And we're talking about their biggest monthly gain since 2020. We just come out of quite a month in July. I did make the comparison earlier. You talk about the yields, right? The NASDAQ goes from a low at that point when you were dealing with a yield of about 3.5%, the high near the 10-year. I mean, look where we were. There's 3.5, right? You inch towards that level. And just like that, as we've pulled back dramatically, you've seen those growth stocks accelerate higher. Now, they're talking about corporate earnings are likely to fall 15 to 20% year over year as margins come under pressure. I mean, that's everything, right? As we face inflation, does inflation persist? And if inflation persists, is it going to weigh on the earnings of these companies? We're going to find out. The one thing I'll say is it's been a pretty strong earnings season so far. And you've seen a lot of the tech companies do fairly well, to put it very lightly. I mean, especially Apple, I talked about, gaining almost $600 billion in market cap over the last 45 days. Staggering. Let's see how Apple's trading this morning. Up another 0.1%. You jump over to Amazon. Amazon just keeps going, man. Up 1%. Let's see how Meta's doing. They've been struggling this week. Up about 0.6%. Google down a bit. And Microsoft giving some of it back as the market's rolling over a bit. Dow off 80. All the markets in the red now. S&P negative by 5. And if you were worried at all about capital in this market, folks, we are approaching a level that's a 50% bounce in the S&P. You take a look at the NASDAQ 100, you're running into a perfect 382 bounce of the full drop we've had this year. You take a look from the pop that we got in the NASDAQ 100, you're coming basically right into the 50% line, give or take, from where you are. And more critically, you're bumping up against an area here where you're on the way back to March prices. There's a lot of people that would have been very happy getting out at March prices when the NASDAQ 100 was at 11,000, right? Or ideally when it hit that 15,000 mark. It's going to be interesting to see where this goes. Data could drive it all. And I just don't see the data being so kind to the Fed when we get these CPI prints. But we're going to find out. And, I said to my subscribers last week, we'd know a lot more at the end of that week than we knew at the beginning. All the big tech stocks crushed it, and the Fed came out pretty dovish. That's how the market interpreted it. But another way to read it was the Fed just said, we can't tell you what we're going to do, and we're going to wait until we see the data to decide how aggressive we're going to beat the hikes. Well, the last data we have, folks, is 9.1. I mean, in what world are we living in where the Fed says we're going to wait for the data, and we're coming off record CPI prints that gives the market actual pause. Well, the world we're coming out of is that the Fed was hiking 75 basis points, multiple meetings in a row. That is hyper-aggressive. Hyper-aggressive. I just don't see them being able to pause that much with inflation raging and the economy, well, technically in a recession by the 2 quarters of GDP decline definition. A lot of broad strength when you look at the numbers as Kevin Hincks just laid them out last segment, talking about 250,000 jobs added and 3.6% unemployment. If the Fed's mandates are full employment and stable prices, which they are, okay, they're going to have both of those in mind. But the estimate right now is for a very, very strong economy with 3.6% on inflation. And the estimate right now is for some pretty staggering CPI numbers still. And how long will the Fed pause, if so? I'm just not sure what's going to happen, man. And, you know, maybe that doesn't mean the market tanks, just to finish that thought, right? But with everything up in the air, is the market really going to rise back to within, you know, a few hundred points of all-time highs before everything erupted? Think about what was priced into the market when the S&P was at 4,800. Was it that we would be dealing with multiple 75 basis point hikes and would be dealing with 2 quarters of shrinking GDP, and we'd be dealing with 9.1% inflation as the last CPI print still in August? That's not what we were pricing in at 4,800. So the S&P would have no business being near 4,800 until we see some data, at least, that lines up with more of the thoughts somewhere in the realm of what was happening during last year. And we're not even close to out of the woods yet. So not bad being, you know, almost 15% off of the lows right now. And maybe this market's just going to wait for tomorrow. And maybe it's just a play where it waits and consolidates until the data begins to line up instead of trading lower. But trading higher is a tough one above 4,200, man. Because you take a look at this daily, you're going to be bumping up against this whole area from March and literally back to January. Man, we're almost back to January prices. You could have gotten out of this market at January prices right now. It seems attractive for some of the carnage that's been out there. And the NASDAQ 100, you're not back there just yet. You want to get back to January prices, you're talking about 400 or 500 points higher than where we're trading at right now. But we are back and trading into the March prices as well. All right, jumping around to some of the action this morning. Walmart, they're laying off corporate employees and after slashing their forecast. This may help in terms of the jobs number helping, right? They are the largest employer in the country, nearly 1.6 million workers. Amazon pretty close to them at this point, I believe, though. They cut the outlook. They've been thrashed recently. One thing, we'll pull up Walmart's chart, man. Yeah, Amazon is at 1.52 after dropping it by 99,000. You know, you talk about some craziness in the market, folks. Walmart last week. This last week, right? Yeah, last week. Slashed their forecast on, I believe, between Monday and Tuesday, right? Yes. So Monday was July 25th. They slashed their forecast between Monday and Tuesday. A stock like Walmart trades down 10%, and they get it all back by Friday's close. To show you what that looks like on a weekly chart, yes, you're technically red, but that's pretty staggering. And I'm not sure it's indicative of strong markets when you can trade down 10% and trade up 10% for a company like Walmart. We're not talking a company like Roku or DraftKings, folks. Stay tuned. Markets in the red. S&P negative by 6. We'll be right back, folks.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30 plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The market's pretty flat right now. S&P's floating with negative territory. You're negative by half a tick. You were just down to a low of 41.46. We've bounced 10 points back to even right now. NASDAQ 100 in the green by 32 points right now, 13,301. We jump back to some of the stories. China a couple times. So Wall Street, Hong Kong, the CEOs, they want zero quarantine to head to Hong Kong. It'll be interesting to see how this plays out, man. Chief executives of Morgan Stanley and Goldman are invited to the summit. Hong Kong holds November summit to mark financial hub revival. They can have a revival with quarantine lockdown? I'm not sure that's how it would work, right? Several of Wall Street's biggest banks have made the quarantine-free travel a precondition for senior execs to attend that conference designed to trumpet the financial hub's revival after years of COVID restrictions. Seems like that would make sense. Nonetheless, we'll see how that plays out. And when you do get into China, man, they fire 11 missiles near Taiwan in the biggest test in decades. 6 areas surrounding Taiwan started at noon. Taiwan downplays the impact on airplane routes and shipping as tensions do escalate over there. There's no denying that one. Yeah, this was an interesting article. So WeWork, their offices just as full as they were before the pandemic. Occupancy rate last quarter matches the one from late 2019. I wouldn't have guessed that one, man. Offices 72% full. Maybe that's why, because they were 72% full at the end of second quarter, matching the number they had before COVID hit. And that is the percentage of its total desks that were rented out. They hit a low point of 46%. Actually shocked it hit 46%, man. I mean, who was going into shared office workspace? 46%. Surprised you wouldn't cancel that and then resubscribe, or however how it works. It now has 62,000 subscriptions to its All Access Pass. That allows customers to book space for shorter increments of time. 815 million in sales, missing the estimate of 821. Continues to lose money. $635 million loss. The market was looking for 479. They're going to be writing Harvard Business School stories and write-ups and case studies on this one for decades to come. All right, what else do I have pulled up here? Yeah, this one is interesting just from a sports perspective. So Juan Soto, he's traded to the Padres. The Nationals get a big bunch of prospects. If you haven't heard of him, he's 23 years old, and he turned down, check this out, which is why I really had it up here, a $440 million contract offer over 15 years. Staggering, the amount of money going on in baseball right now. And that is for 246. That's for hitting 246. Is there enough money in Major League Baseball, man? Hitting 246, now 20 home runs, 45 RBIs, 91 walks in 101 games. I think he won the MVP and a title last year, but you're talking about some serious money to be churning down $500 million batting 246. Baseball, no matter what they say, alive and well. And I'm the first one to say, man, I miss Red Sox because the Rays down here, unfortunately, have no following, and that just creates it's a self-fulfilling prophecy. Nobody's at the park, so it's not a good experience, so there's no reason to go to the park. But baseball has a problem. It's too old and too slow. A game not designed for our slow attention span at these days. All right, folks, we have a little bit of a schedule announcement coming up for our man Larry Pesavento and Steve Rhodes. So Larry, unfortunately, has been out. He got COVID again, but he's doing well, getting better every day. Larry plans to be back on Monday, and Larry and Steve are going to be swapping times. So Larry's normally at 11 right now. Steve is at 1. That will proceed this week, okay? Steve may be doing his show Friday at 8 in the morning as well. Maybe somebody in the den. I think that may be the deal. I should know the best. But Steve and Larry are going to be switching times on Monday, okay? So starting Monday, I'll do my program at 9. Our man Basil Chapman comes in at 10 o'clock. Then we'll have Steve Rhodes with the Trader's Edge at 11, Fast Market at 12, Larry Pesavento with Trade What You See at 1 o'clock, Dave White with the Power Trading Hour at 2 o'clock, and Tom O'Brien live from 3 till 4. So Larry and Steve switching on Monday. Mark it on your calendar and tune in. It should be a good lineup. And yes, Steve is doing his program at 8 a.m. because he is tied up, unfortunately, on Friday. So he'll be doing his program at 8 a.m. So today will be the last day that Steve does it at 1 o'clock. And then Monday, they start with the new times. Thanks for that. All right, jumping around other stories. How about this one? Be careful of China, man. Copper, worth nearly $500 million, goes missing in China. That's $500 million, folks. 200 tons less than it should. Risky financing in China. I would say so, man. What just happened? There we go. So a group of Chinese companies are investigating why a commodity storage unit in northern China is holding only a third of the copper concentrate they were financing. Imagine that. You just tell everybody you got, $1.5 billion, or what would that be? $750 million in copper, 1.5. What are they missing? A third of it? Yeah, it's holding only 1/3 of the number. So be careful in China across the board, man. If you don't think bad things can happen for big companies, that's a $500 million disappearance. And you know that it matters, and you know that it's China, and that stuff is going on all over the place. Lots of fraud, exactly, across the board. And in terms of other articles, what do we have pulled up here? Yeah, that was pretty much it at the top. I mean, we have some companies out with their numbers that Kevin was talking about later today. Weekly jobless claims out this morning, 260,000. This number not as important as many of the other numbers that we're coming down the line. And the market looking tomorrow for an add of about 250,000 jobs they talk about for the non-farm payrolls. All right. As these indices catch a little bit of a pop, let's take a look at that gold contract. You're up $19. Taking a look at gold on the longer-term time frame. You put it on the 5-year weekly, man. This is a nice area of consolidation on gold. Gold has held up relatively well when you think about how strong the dollar has been, right? If you've owned gold, our man Steve Rhodes loves to take a look at gold in other currencies as well. If you've held gold in some other currencies, man, if you're a euro trader and you held gold in euros, or you held it in almost a lot of other, you were doing tremendously well. So the fact that you were able to navigate such a strong dollar by just trading back to this consolidation area, when that eventually shifts, and it may, gold may have an upside here, and 2,000 is the area that You could easily see it pop too, and that's just the highs that we had from March of this year on that gold contract. You check out crude, we're back above $90. 382, right? Crude makes it back to $83, man. Start filling up your gas tank, man, because that is the 382 of the entire run. And what skews this a bit, though, is that this is the continuous contract. And remember, we actually had negative prices going on in April of 2020. I have a $6.50 price tag for the prices I'm starting this from right there. But either way, that would be coming right back to the highs we had from October of last year. And as I talked about in the beginning of the program, man, the world has changed a lot. Because even if you were factoring in some of those risks of war, very few factoring in how escalating things could go and how persistent and how long it could take as it still goes on. Stay tuned, folks. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we got the S&Ps negative by 2, jumping around to meme stocks right now. HKD. What is it? AMT Holdings, right? Is that the company? Down about 200, getting a little slow action right now, to 900, reached that high at 2,500 a couple days ago. But what's running today? Coinbase. They got Coinbase up 21%, man. It was up to 116 on the open. Things just got out of hand at about 8:50 a.m. this morning. It accelerates I would not get involved in this. You can be a momentum trader, folks, but boy, you better be ready for some big moves, man. When you're talking about $20 in either direction in a heartbeat, Coinbase up 21% today. And I've said it before, I think there's better ways to trade crypto than even touching this equity, man. Down from $4.29 to $40, down from $3.50 just in November of last year to $40 recently, and last week you were trading at 52. You just spiked to 116, was it? 116 for Coinbase. Crazy. Dow negative by 37. NASDAQ barely in the green, and the S&P is negative by 1. Maybe we wait until tomorrow morning. They're going to be important data points, folks. If you want to trade them, don't miss them, because the market is going to have some big moves if there's some big misses when the Fed has told everyone they're waiting for the data. We get jobs tomorrow. We get CPI next week. Two big numbers that the market will be looking for, along with some earnings companies. And yeah, they're talking about Square, man. You talk about some moves, right? On a 20-day, you're up from 65 to 85, man. Since, what is that, last Tuesday? 7 trading days. You're up, 30% on that equity? You take a look at this thing on a weekly, though. Still well off the highs of last year, man. Let's take a look at where we are. If you put this on a daily, because Square has numbers after the bell. Just even the pullback we've had since where we were in March of this year at 150, on a Fibonacci basis, you're coming into a 382 there. You're also coming into the highs we had from May. You take a look at the Analyze tab. They got about a $10 move priced into their earnings, $9.26. You're talking about more than a 10% move priced into their earnings. And yes, they're after the bell tonight. Quite a run. Always tough when you have the run that large coming into earnings. All right, folks, stay tuned. We're going to run Basil Chapman up next. Larry's back on Monday, as we said. Fast Market. Steve Rhodes live at 1 today. Dave White, Tom O'Brien. Have a great Thursday, everybody.